to the next point.
Towards
We should ensure
us.
whatever we say is clear.
That means work is being done. We can see that it is in opposite direction.
Good day, students at home, listeners and viewers. You are welcome to another segment of the e-learning. I am Blessing Ayubo Samson, one of your financial accounting teachers, and I'm here today to present to you a topic in financial accounting, accounting terms. We will start by definition of accounting. What is accounting? This entails all activities such as recording, classifying, selecting, measuring, interpreting, and communicating financial data of an organization to enable users to make appropriate decisions. Here, we are talking of recording. That means every transaction has to be recorded, classified accordingly, selected accordingly, measured accordingly, interpreted, and communicated. It helps an organization to keep a proper record, and for outsiders that wants to invest into such organization to have a very correct picture of the financial picture of that organization. Accounting system. The system of accounting is based on the accounting equation. All accounting has to have an equation so that it can be able to balance. The accounting equation explains that for any firm to operate, it needs resources. And these resources will be supplied by the owner. The resources supplied are referred to as capital. Resources supplied to an organization is referred to as capital. The firm, after the receipt of the resources from the owner, will use the resources to acquire assets for the firm based on these facts. Now, what am I trying to say here? Resources, when you open a business, you inject capital. The capital is a resources that will help the organization to make profits or loss, and that determines whether the organization is growing or it's not growing. Now, the following equation holds. We say capital is equals to what? Asset. Capital is the resources that you inject into the business, and it produces assets. If some of the assets have to be provided on credit by a person other than the owner, its equation will hold like this. Capital plus liabilities is equals to what? Asset. Capital plus liabilities is equals to what? Asset. That means the liabilities are credits owned by outsiders. And when you put them together, the business has what is called asset. Then we are going to define the word capital. Some of you may say money is the first thing that you put into business. Yes, but in accounting terms, we call it capital. We don't say money. The first resources you inject into a business is called capital. And this is the definition of capital. Capital, it is the sum injected by the owner of a business into the business. The sum injected by the owner of a business into the business. It is also called invested sum or capital employed. This is the initial resources to start up a business. Then we have liabilities. These are indebtedness of a business to third parties other than the owner. Such liabilities are expected to be paid when due. The liabilities may be held for short and long terms. If the liabilities are held for short times, we call them current liabilities. Liabilities that are held for short time, let's say a year, 6 months, are called current liabilities, while the ones that are held for long time are known as long-term liabilities, where creditors can hold your money for 2 to 3 years. We call them long-term liabilities. Then we have assets. What are assets? These are properties or belongings owned by the firm or the business at any point in time. Assets is what the business owns, what makes money for the business, what increases the business is called assets. Assets can be fixed. We have fixed assets, current assets, or intangible assets. Now we are going to take a definition of the three of them. Fixed assets are tangible assets in the sense that you can see them, you can touch them, and they are subject to depreciation in physical value except landed property. Fixed assets are assets that you can see. Whatever you can see are called tangible assets. For example, we have the motor vehicle. It's an asset to your business. It brings resources to your business. We have plant and machinery. We have furniture and fittings, and so on. Now we have the current assets, which is the number 2 assets. These are revolving in nature. They change from one form to another. Liquid cash, stocks, debtors, cash at hand, and cash in the bank. Examples of current assets is what we use every time to make resources to change in business. It changes. We say stocks are goods that are purchased into the business to make returns. Debtors, that is people that are owing us, that they will pay us the money. Then we have cash in hand and cash at bank. Then we have the intangible assets. These are assets that cannot be seen or touched. Intangible assets are assets that we cannot see and we cannot touch them. For example, goodwill. It explains for itself. If your business is carrying on well, people will just see you growing. Royalty, patents, all these are laws. And we have a lot of them. Then we are going to discuss the balance sheet and the effect of business transaction. A balance sheet is a snapshot of the financial position of an organization. What do we mean? A balance sheet is a review of the financial position of your business. In a balance sheet, you can be able to determine your fixed assets and your liabilities. When we say a snapshot, it's what determines your business. It determines the take-up of your business. Is your business going to grow or is it falling? The balance sheet gives us a review of the position of your business. And the following are the features of a balance sheet. These are the things that you see, and you will know that this is a balance sheet. One of the features of a balance sheet is that it must bear the name of the firm. Number 1 features of a balance sheet is that it must bear the name of the firm. Number 2, it must be prepared for a particular period in time. A balance sheet must be prepared at a particular period in time. It is divided into 2. A balance sheet is divided into 2. We have the asset side, which is on the credit side of the account. And we have the capital and the liability side, which is on the debit part of the account. A balance sheet, I come again, is divided into 2 parts. The debit side is for the capital and the liability, while the credit side is for the assets. A balance sheet must always balance. Your balance sheet must always balance. If it is not balanced, then there must be a problem. It could be prepared in 2 ways. It can be vertical or T format. I'm going to give you an example of how a balance sheet is being prepared. Example 1. On 1st January 2008, B. Calabar started a business and injected 50,000 cash into the business. B. Calabar started a business and injected 50,000 into the business. The features of a balance sheet 1, I said it must have a name. You can see the B. Calabar, and the period of preparation is 1st January 2008. And we have two sides of the balance sheet. We have the debit side and we have the credit side. He started business with 50,000, which is the capital. It goes on the debit side. Then we have the credit side, which is for the asset. And I told you we have current asset. Cash at bank is 50,000. Preparing this account, 50,000 is the cash, but in accounting, we call it capital, as I've told you before. And what we have at hand is what? 50,000. This closes to the second one. Number 2, the same B. Calabar purchase of fixed assets by check. He purchased a fixed asset by check. And the name of the fixed asset is plant. It was purchased for 45,000 naira on 10th of January 2008. Starting with the name B. Calabar, balance sheet as at 10th of January 2008. We have two sides. Our capital is 50,000. The plant that was acquired is higher than the cash. And you must know that our balance sheet must come in sequence, the higher before the lower. Now, capital is on our credit side. We purchased a plant for 45,000 naira. The cash that we have at bank remains 5,000 naira. This is a very simple calculation. The capital we started our business with is 50,000 naira, and we purchased a plant for 45,000 naira. And our plant is an asset which is on the credit side of the account. Now, the balance that we have in our bank is 5,000 naira. And when you close this account, 50,000 naira on the debit side and 50,000 naira on the credit side, I said your balance sheet must be equal and correct. Then number 3, purchase goods worth 150,000 on credit on 15th of January 2008. B. Calabar purchased goods worth 150 naira on credit on 15th January 2008. We said the balance sheet must have a name, B. Calabar, and the period of transaction is 15th of January 2008. Our balance sheets have two sides, the debit side and the credit side. And the capital remains 50,000. We are only turning it to see whether this business is going to move forward. Capital is 50,000 naira. The plant that was purchased is 45,000 naira. And we collected credit for 150,000 naira. And I told you that liabilities and capital is on your debit side. Creditors are liability to a business. When you collect credit, that means you are owing. So it is a liability on your organization. So it is going to be on the debit side. And what B. Calabar collected is 150,000 naira. On your debit side, the stock that was collected, that is the goods, will still come as stock as 150,000 naira. And our cash at bank is still 5,000 naira. You can see that 50 plus 150 on our debit side is 200,000 naira. Plant, which is 45,000 naira. The stock collected on credit is 150,000 naira. And the cash that we have at bank is 5,000 naira, which is sum up to 200,000 naira. Then, B Calabar sold 75% part of the stocks on credit for 135,000 naira. Out of what he has collected, out of the goods that he purchased, which is 150, he sold part of the goods for 75,000 naira. He sold parts on credit for 135. That is half of 150 was sold for 135 on 20th January 2008. By looking at this question, you should know that there's a profit in this business. Part already is sold for 135, and we're still having 75 left. So the table goes like this, with the name B Calabar, balance sheet as at 20th January 2008. On our debit side is our capital, which is 50,000 naira. Profit, how do we determine our profit? The good was sold 135, and part of the goods is 75,000. So you make the difference is 60,000 naira. You can see it there. 135,000 naira minus 75,000 naira will give us 60,000, and the 60,000 is our profit. Then the creditors have not been paid. It will still come under the debit side, which is the liability side of your account, as 150,000 naira. Then our credit side, our plant that was bought is 45,000 naira. Then the stock that was collected on credit is 150,000. Part of the stock was sold for 75,000 naira. So you have to deduct it. And the balance is 75,000 naira. Debtors, we sold on credit. So it's a current asset, because when we are paid, it becomes an increase on our side. So whatever is sold on credit by the organization, that's by B Calabar, is named debtors. And B Calabar sold part of the stock for 135,000 naira, which is going to be brought to the credit side of the account. And our cash at bank still remains 5,000 naira. Now, our calculation. On our debit side, 50 plus 60 is 110. 110 plus 150,000 is 260,000. On our credit side, 45,000 plus 75,000 plus 135,000 plus 5,000 is 260,000. On 24th January, 40,000 was borrowed from K Kanu and lodged into the business accounts. Students, you have to take account of every word that is here. If not, you make mistake. Into the business bank account. B Calabar, the name comes first. Balance sheet as at 24th January 2008. Our two side, which is the debit side and the credit side. Now, on our debit side, your capital is 50,000. That is what you started your business with. We made a profit of 60,000, which is on the debit side. The creditors have not been paid. Your 150 is still there. The loan that was borrowed on this day is going to be on the debit side of your account because it's a liability. On the credit side, we have plant, which is 45,000 naira. Then the stock. Students, you know how we got the stock. 135 minus 75. Part of what was sold is 75,000 naira. Then our debtors is 135,000 naira. Then we have cash at bank, 45. It was 5,000 before. How is it 45 now? Students at home, the business borrowed 40,000 from K Kanu and it was lodged into the business bank account. Cash at bank was 5,000. When 40,000 was borrowed, it was borrowed and put into the bank account, which made it 45,000 naira. So when you look at the calculation on our debit side, 50 plus 60 is 110 plus 150 plus 40,000 will give us 300,000. On our credit side, 45,000 naira, 75,000 naira plus 135,000 naira plus 45,000 naira cash at bank will give us 300,000 naira. Receive 120 from the debtors on 30th January 2008 and paid all the creditors at that date. That means 120 from the debtors that collected credit from us, from B Calabar, 120 out of 135 was paid. Now this is how the account should be. B Calabar as the name, balance sheet as at that date, which is 30th January 2008. On our debit side, we have capital, 50,000 naira. Profit is 60,000 naira. The loan has not been paid, so it will reflect, which is 40,000 naira. On our debt credit side, the plant that was purchased is 45,000 naira. The stock is 75,000 naira. Our debtors had paid 120. So when you deduct 135 from 120 that was paid, we have 15,000 naira. 15,000 naira is what we have. Now, when you calculate the debit part of your account, we have 150. Coming to this side, that's the credit side. Up till this side, we have 135. The balance is, when you deduct the debit side from the credit side, the balance that we have is 15,000 naira to make up the balance of 150,000 naira. Students, we are done with today's lesson, and I'm giving you a take-home assignment to be submitted to my number. And our assignment number 1 is, another name for capital is what? Another name for capital is what? Number 2, the report that shows the financial position of an enterprise at a point in time is called what? The report that shows the financial position of an enterprise at a point in time is called what? List all the features of a balance sheet. I stated the features when I was discussing my lesson. I want you to give me all the features of a balance sheet that was discussed. I'm going to say the assignment again in case of those that are hearing on radio. Number 1, another name for capital is what? What is another name for capital? Number 2, the report that shows the financial position of an enterprise at a point in time is called what? Lists all the features of a balance sheet, as was discussed earlier. List all the features of a balance sheet as discussed earlier. I remain Mrs. Blessing Ayuba Samson, and my phone number is 081-8269-2515. I repeat my name again, Mrs. Blessing Ayuba Samson. Send your assignment to this number via WhatsApp or a text message 081-8269-2515. Stay home, stay safe, keep learning. Until we meet again.